This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril at the Milken Institute Asia Summit in Singapore. The top stories this hour. A softer open ahead for Asia after bullish tech momentum saves Wall Street from losses. OpenAI share sale bolstering optimism about the sector. Tesla shares skid as investors bet a record quarter of sales will be hard to repeat. Also ahead, crunch time for Japan's ruling party with its leadership vote a last chance to avoid drifting further into political peril. And some great guests coming up here at the Milken Summit. We'll dig into private credit markets with Goldman Sachs and PIMCO.
Take a look at the setup across Asia. We have China and South Korea away on holiday, so we're watching the open in Japan. Futures are trading down 0.2%. But after an incredible rally for Japanese equities, and in fact, we have more people just upgrading their year-end targets. The latest, JP Morgan, we had Goldman Sachs last week as well. And really on optimism that perhaps the coming election this weekend will lead to more political stability. And of course, we're also thinking about fiscal spending to come after the elections. We're also thinking about the BOJ, a potential rate hike this month. And we've been watching, of course, JGBs with the 10-year really yield near a 2008 high. The 10-year JGB auction was weaker than expected and perhaps pretty much expected given those concerns. We had the BOJ Deputy Governor Uchida talking about really reaffirming that stance of hiking rates if the economy performs. That has boosted the Japanese yen, of course. And we already had a spike earlier this week, remember, because of the U.S. government shutdown, the yen holding at that 147 level. But take a look at the U.S. because we saw that second day of U.S. government shutdown leading to a little bit of more caution sentiment. But at the same time, we had this incredible rally on the NASDAQ, a second session of record highs, and we have those tech stocks being led higher by OpenAI. And of course, we have seen that correlation between Bitcoin and the Philadelphia Semiconductor Index as well, and you're now seeing Bitcoin past that 120,000 mark. Crude price has also a little bit of a boost, although, Avril, we continue to have those concerns over oversupply.
And I think the key thing we're watching in markets also the continued fallout from this U.S. shutdown. Let's bring in Bloomberg macro strategist Cameron Kreis for us. So, Cameron, Shery ran through a number of themes that we're keeping watch on, but I think what was also interesting is how the shutdown risks seem to have revived the steepener trade a little.
Yeah, to a degree. The president and his minions, if you will, have made it pretty clear that they're using this shutdown as an opportunity to shed workers from government payrolls. The director of the Office of Management and Budget, Russell Vought, said that they are going to continue to pursue that, as well as cutting funding for other programs. And, you know, tomorrow, my tomorrow, your today, is supposed to see the release of the non-farm payroll figure that it looks like it's not going to be released. There was a story today that Senator Elizabeth Warren had reached out to BLS, and they said, well, we've got the numbers, but we just can't release them. Without being open. So it's one of those situations where, everybody's uncertain. We're all looking at these sort of ancillary private sector readings on unemployment. The ADP survey earlier this week was very weak. There's another private sector survey, Revelio, which was a little bit stronger. Although really just consistent with a somewhat strong, better than expected, consistent with a payroll number that would be somewhat better than expected. But listen, all of the data in aggregate is suggestive of a labor market that at best is sort of in stasis. And the Fed has indicated that they're in aggregate quite sensitive to this and the downside risks that are posed to this, which are just going to be exacerbated if more government workers are shed. So, it's one of those things that it's. I think everybody wants to see the data released. I guess other than the administration.
But I mean, how much does this matter for the equity markets? Because it seems that we're looking for any excuse to rally, and the exuberance over AI and tech continues.
Yeah, well, I think you've just hit the nail on the head there. As the old saying goes, eventually this too will pass. And yes, there are some government workers in particular that might be, for whom there will be a significant impact. But in the grand scheme of things, we're talking about probably a maximum hit to economic output of a few basis points of GDP. And in 6 months' time, that's going to be forgotten. And I think with all the narrative surrounding the AI trade, the recent valuation of OpenAI jumping with their latest placement, I think nobody wants to hop off the train because for now it's sort of full speed ahead, which I realize isn't hugely insightful, but I think it's one of those cases where as long as the music is playing, everyone is incentivized to keep on this trade and to keep adding risk, because nobody wants to see themselves in a position where they become defensive too early and the rest of the market just zooms ahead and leaves them behind.
Yeah, it's also hard to argue against the AI bet. But Cameron, I wonder, in your assessment, are we already seeing some of these signs of the impact on the macro economy?
From AI, well, it's quite interesting because there's this widespread belief that AI will really boost productivity. It'll take the place of sort of low value added workers. And to date, the evidence is pretty skimpy, to be honest with you. If you look at the annualized growth in U.S. productivity over the last 3 years, which is roughly the period that captures what we'll call the AI era, it's been around 2% annualized, which is really pretty close to the long-term average going back to really World War II. So it's hard to say that there's been any huge notable jump. In fact, if we look at a somewhat longer growth rate of productivity, say over the last 5 years, it's actually worse than average. So from that perspective, we haven't really seen the beneficent impact yet. That being said, in the dot-com era, we had the exact same thing, where productivity was starting from a very low base, say in the mid-1990s. It picked up a little bit, and by the end of 1997, the 3-year growth rate of U.S. productivity was more or less where it is now. The key in the dot-com era is that it shot higher over the ensuing sort of 3 to 5 years. And I think, is it possible that we get that now? Yes, I suppose so. But the bar is quite high to match what we've seen in the dot-com era. And at the same time, while we're all focused on all this huge CapEx from Microsoft and Meta and Amazon and Alphabet, if you look at the actual contribution to GDP growth of investment, it's actually smaller than it was during the dot-com era. And perhaps one of the reasons is that the overall level of business investment in the economy now is much, much bigger than it was back 25 or 30 years ago. And, you sort of have to make trade-offs if you want to plow more money into AI investment. So that is potentially a risk.
So, Cameron, what is the trade-off for bond investors, for example, when you calculate the growth outlook, but you're also seeing concerns about fiscal spending? Of course, we had, for example, the German auction of 10-year debt technically uncovered. Here in Japan, we have the 10-year auction also being pretty weak. Of course, here in Japan, we have the caveat that we are headed towards a leadership election as well.
Sure. Yeah, I think globally there's been sort of a realization that sort of fiscal prudence has kind of gone out the window on the one hand. That we've moved away from such aggressive secular disinflation that characterized the era of globalization and particularly the post-GFC malaise. Clearly, U.S. trade policy is throwing globalization into reverse, which kind of by definition is intended to allocate production to, if you will, to less efficient, less low marginal cost locations, namely the U.S. in the case of manufacturing, which should, all else being equal, raise price levels and raise in inflation. And I think in the long end, investors are really trying to say, am I getting compensated enough for taking this risk of more secular inflation moving forward, more fiscal profligacy, not only from the U.S., where neither side of the political aisle seems terribly inclined to rein in the deficit, but also elsewhere. There's a greater embracing of fiscal spending, deficit spending in Europe. The UK has its obviously its own issues. And if AI does raise productivity levels and productivity growth in the US and indeed around the world, that arguably would imply a higher neutral level of interest rates. So that's another thing to consider as well.
Cameron Kreis, good to have you with us, Bloomberg macro strategist with a picture of the global economy and, of course, the broader markets. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how we're setting up for the market opens in Japan. We had a session of gains yesterday, but after 4 sessions of losses already, and we can see Nikkei futures at the moment pointing to the downside. Despite all of this and the lost momentum in recent days, we have seen the likes of JP Morgan raising the year-end target for the Nikkei to 47,000, topics to 3,300. Goldman Sachs raised the topics target to 3,400 last week as well. We are expecting jobs data later this hour, so do watch out for that. All of this ahead of that leadership vote, of course, happening tomorrow. Japan's ruling party voting for a new leader, with the winner set to become the country's second prime minister in just over a year. Investors will be watching for any signals on fiscal and monetary policy, amid, of course, trade and economic headwinds. Let's bring in our panel. Bloomberg's East Asia government editor John Herskovitz here in Tokyo. Also with us from Singapore is senior FX and rates reporter Ruth Carson. John, let me start with you. So how are we setting up now for the vote tomorrow?
Sure. We have two people who are the front runners. One is the agriculture minister, Koizumi. The other is a former economic security minister in Takaichi. Koizumi would be the youngest prime minister post-war if he's elected. Takaichi would be the first woman to run Japan. Koizumi is trying to position himself as a reformist. Takaichi is part of the camp of former Prime Minister Minister Abe, looking for an accommodative stance from the Bank of Japan, monetary easing, and she is also quite conservative, which could ruffle some feathers with countries such as South Korea and China.
Ruth, let's bring you in here. What are some of the top strategies that hedge fund investors are employing heading into election weekend?
Yeah, it's going to be a closely watched race among the investors. And for hedge funds that like to take different kinds of positions, we're seeing a real mix of what is on the table. Some of them are opting to take risk off completely. So some of them have been shorting the yen and they've closed those positions. Others are going a step further, buying gold, for example, as a hedge. Others are actually shoring up capital, looking for the opportunity to deploy the capital by shorting or selling stocks on any rally. So we're seeing a real mix here.
What are we seeing in the bond space as well? Because we had a weaker than expected 10-year JGB auction, not to mention, of course, a very weak 2-year auction earlier in the week as well. We have concerns over fiscal spending after the election.
Absolutely. It's the same argument in many ways for the rate space. People are waiting, are watching. You're absolutely right. The results haven't been great when it comes to the auction, so there's still a lot of nervousness there. So hedge funds, some of them are actually taking bets off the table. Again, it's about holding cash, hedging your bets a little, and when there is more clarity, we might see more steepener positions coming into the JGB market.
John, I wonder, even after we go through this election weekend, there's a possibility of a runoff. And then when we finally get the next leader of the LDP, who will most probably lead the country next, what are the challenges in terms of reinvigorating the party?
Sure. I mean, there are an immense array of challenges facing the next leader. First, the LDP and its junior partner don't have a majority in either block of parliament, so they're going to need help from one of the political parties, one of the opposition parties. This raises a concern that they could give away, that they'll be pressed to do measures such as cutting the consumption tax, which would add to Japan's debt, which is already crushing. Then, on top of this, we have the international challenges. We have a visit from President Trump at the end of this month. We have the U.S. trade deal, which is critical to Japan's car industry, and also has this $550 billion investment fund that has to be worked out. So we have the challenges are enormous. The person who enters the position will be in a weak position to start, and on top of this, they have to rebuild the brand of the LDP, the party that has ruled this country almost exclusively in the post-war years. So it's just the person who's going to step in is going to be facing challenges unlike those faced by any prime minister in years.
And the social mood also seems to be changing, right? I mean, we have seen the rise of populist and far-right groups as well.
Sure. One of the big issues has been immigration and foreigners here who may be doing work illegally. That has been something that has dominated the LDP debate. The public is quite interested in this. So this is one of the challenges that the new LDP leader is going to face. So how far do you go on this issue? How much do you alienate the foreign workers who are actually quite needed in Japan because the population is shrinking, there are more jobs than there are people to fill them, and Japan for years, for decades, has been relying on immigrants to come in and do some of the jobs needed to propel the economy forward.
Ruth, as we wait for the outcome of this leadership race, what was also interesting this week was how volatility picked up a little bit on dollar-yen. What sort of spot levels do we need to see for options traders to get really excited again?
It is such a tough question to answer because, as you've said, we've seen volatility pick up. But when you look at where spot is going, it's between 147 and 149, and it's been the case for the past month or so, despite some of the tensions that we've seen when it comes to JGB auctions and some of the geopolitical and macro developments in the world. But I would say that as soon as there's a bit more clarity, we will see more funds getting a lot more active, be it asset managers or hedge funds. Could it actually break 147 and 146 or go higher? That will very much depend on developments. But when it does happen, I reckon we're going to see some sizable moves, at least according to the strategists and asset managers that I'm speaking with.
Right. Bloomberg's Ruth Carson and also John Herskovitz. Great conversation ahead of the leadership election here in Japan this weekend. We have more ahead. This is Bloomberg.
The European Union is said to be considering a proposal to hike imports on some steel imports to as high as 50% to align with US policy. And this is in response to a flood of cheaper steel into the EU from places such as China. And let's get more with our chief North Asia correspondent, Stephen Engel in Hong Kong for us. Steve, what do we know?
Well, what we do know is that there's a temporary mechanism on steel import tariffs by the EU of 25% on some imports after a certain quota is met. Beyond that, there's that 25%. The new proposal is for that to be 50% essentially, and that would put it in alignment with the Trump administration policy, of course, on steel imports of around 50% and upwards on other metals like aluminum and such. And again, you know, the EU is following Trump's moves by planning this hike in steel tariffs at a time, of course, when the European steel industry, which is largely in places like Poland and Eastern Europe, is essentially in a state of crisis for the last few years, as there has been a flood of cheaper alternatives to the EU, to the bloc, from places like China and other Asian nations. This is what the EU's industry chief said about this possible move, which will be discussed in the coming weeks. Was quoted by sources as saying that while the EU continues to believe in an international order where trade is possible, quote, we will not be the only ones to impose on ourselves the principles that others no longer apply. So again, you can see that this is, according to the EU and EC officials, a necessity given what other countries like the United States have done.
And Steve, of course, we're headed towards a meeting between President Trump and President Xi Jinping. Do we know anything about Beijing's purchases on soy right now?
They're not buying. Right? So Scott Bessent, the U.S. Treasury Secretary, has alluded to the fact that he's disappointed that China would make soybeans a negotiating tool. That is something as well that Donald Trump alluded to as well, that he believes that China is holding back on big purchases of U.S. soybeans in midst of the harvest season right now, which is already more than a month into the harvest season. And the Chinese have not bought a single load of cargo of soybeans this year. Anywhere between 30 to 60% of the U.S. harvest traditionally is sold to China. So whether it's a negotiating tool or not, Trump and Xi are not going to meet for another month. So that's another 4 weeks deep into the harvest season that China potentially is not going to be buying. So this season might already be a wash. Now, that being said, Scott Bessent says he expects a pretty big breakthrough. Those are his words, quote unquote, in the next round of trade talks with China. Now, that will likely happen either before or around that meeting on the sidelines of APEC in South Korea at the end of this month and early November, before the current 90-day truce expires on November 10th. So he's expecting a pretty big breakthrough, and he is also expecting, he meaning Scott Bessent, is expecting a fifth round of trade talks, direct talks across the table with his counterpart, He Lifeng, Vice Premier, to happen before November 10th. So 5 rounds of talks, and he's expecting a big breakthrough. It's going to be tough to get a big breakthrough, though, if it's not going to happen for another month, to get the soybeans shipping off to China and alleviate some of the pain that the U.S. farmers from Iowa to Minnesota to Washington State are feeling, and also expressing their outrage that they're not having this export market, while at the same time the U.S. government is talking about essentially tapping into the revenue from those tariffs and helping financial aid given to those farmers.
Stephen Engel, our chief North Asia correspondent there. And of course, we do have the Chinese markets away on holidays today. The offshore yuan holding at 7.13. More ahead on the Asia trade. This is Bloomberg. We have breaking news out of Japan. We are getting the jobless rate coming in at 2.6% for the month of August, which is a larger jobless rate, the rate higher than in the previous month and also higher than estimates. Still in Japan, we're talking about a tight labor market, 120 jobs available for 100 job seekers. A little bit of slackening, but still in line with Bank of Japan's expectations at a time when we're expecting the BOJ to hike rates as early early as this month, we heard from the BOJ Deputy Governor Uchida already reaffirming that stance. If the economy permits, we have seen that upside on the Japanese yen earlier in the week as well, given, of course, the concerns over the government shutdown over in the U.S. Avril. But still, right now, jobless rate at 2.6%.
Yeah, and we'll watch to see how that plays out in dollar-yen, especially as we head into the weekend. But I'm here at the Milken Asia Summit in Singapore, where private credit has also been one of the hot topics. This is a $1.7 trillion industry, right? And it's widely considered untested. It's been booming in recent years. Fitch Ratings, for example, says that this asset class has already been showing bubble-like attributes, including financial innovation, more competition, growing retail participation. Let's discuss the challenges and opportunities with James Reynolds. He's Global Co-Head of Private Credit at Goldman Sachs Asset Management. Great to have you at the event, James.
Thank you. It's great to be here.
So I've just talked through some of the concerns, but tell us more about what you are seeing in terms of market conditions. Specifically, is there a sort of gap between deal-making and fundraising at the moment?
I would say since Q2, we've certainly seen an increased level of activity, right? On the back of Liberation Day, steadily increased M&A activity, the IPO markets have reopened. And so I think that bodes well overall for private credit, given the need to finance, whether it's buyouts or in general, to finance the industry, whether it's digitalization of the industry, energy transition. So I think there's been actually a renewed level of activity in private credit. I wouldn't say there's a gap, by the way, between fundraising activity and between the investing activity. I think fundraising is different this year. Maybe it's more skewed towards outside of the US. If you look at direct lending, for instance, we're seeing a lot more activity for funds getting raised for Europe, for instance, or LPs asking questions around other regions, such as Asia. But I would say overall the fundraising activity remains pretty solid, also with more innovation around evergreen vehicles, for instance.
What about deal value? What are you seeing overall? Has that been improving as well?
Valuation of companies, I would say that's less of an issue for us. You know, we're lenders. We care about predictability of cash flows, making sure that, you know, our loans get repaid plus interest. So I would say, you know, valuation is less of a concern. Obviously, we look at some stats like equity cushion. I would say it's been pretty steady. It remains competitive out there for private equity in particular. And so for the right assets, for the high quality companies, pretty hefty valuations are still being paid.
You talk about some of the questions that you're getting from investors about Asia in particular. I know you've been an early entrant to Japan, and this is also a market where a lot of talk has been about this private credit boom. What are you seeing in market conditions specifically in Japan?
Look, we're excited about Asia. By the way, you mentioned in your introduction, it's not been tested. The industry, we started almost 30 years ago. So we've had, you know, our fair share of experience over the cycles, and we've been in Asia for a very long time. Goldman Sachs has been in Asia for 50 years. We've been investing in these markets in private credit for over 25 years. We have teams all over Asia. We've been very active in Japan. We're seeing a renewed interest, I would say, or an increased interest from private equity firms in Japan in particular, but across Asia. And by the way, these private equity firms, they want to get the same experience that they're having with us in Europe or in the US when it comes to financing their deals, right? And so we're very active. We've got a team on the ground, and we work really hand in glove with our investment banking colleagues. I think that's also very special. The edge in what we do is around the origination, and it's around keeping the discipline of the underwriting.
So what if the deals, tell us a bit more about what sort of deals are, you know, being transacted, and where do you see the opportunities, specifically sector-wise?
Look, I won't go into specifics, but I would say we've, over time, over the last 28 plus years, we've tilted our global portfolio towards larger companies. And so we're seeing an increased level of activity, buyout activity in particular around Asia, but obviously Europe, US, around larger buyouts. I would say we, you know, in credit, you know, your alpha is just about avoiding losses. And so if you want to do that, we think it's preferable to focus on those sectors that are a bit more defensive, non-cyclical, recession resilient, and certainly, again, we've been tested over time, including during the GFC. And so we're going to tilt and index our portfolios towards these sectors. I would say we do a lot of healthcare. We do a lot of mission-critical business services. We have some exposure to large software businesses. I would say, this is the type of sector that we like to lend to. Predictable cash flows, market-leading firms with pricing power. And again, we've been tested through the inflationary years. Now we may be on the other side slowly, but these are the type of businesses that we like to lend to. And I would say at the core of it is cash flow lending, really predictable cash flow generation. That's what repays our debt eventually.
What about AI?
Look, AI, I would say at this stage, what are we seeing in AI? One, we're very active financing kind of the AI boom, whether it's around data center or the increased consumption level of energy, right? So whether it's the first derivative or the second derivative of AI, we're also asking a lot of questions about what does AI mean for our portfolio companies or companies in which we want to lend to, right? Because again, go back to basics. Credit is about avoiding those losses. If a company is going to get disrupted or a business model is going to get disrupted by AI, I mean, this is why we spend all our time in investment committee and screening discussions.
Right. You alluded to some of this, right? When you look at some of the software companies that you're focused on, how are you ensuring quality? What are you actually digging into the details of when you look at the tech stack, for example?
And that's also where experience does matter. Having that kind of dedicated teams that are sector experts and also gathering all the network expertise that we can within and outside the firm. I would say what I've noticed recently or in the last couple of years is the market leaders are using AI to their benefit, maybe to be a bit more productive. I think they're growing a little bit faster or certainly extending their relative market share versus their smaller competitor, thanks also to the way that they're using AI. But I would say this is the core of what we do as a team, as an investor team, around the world, which is asking all these questions and trying to get to an answer or a conviction one way or another, by the way. Most of the time, we decide not to invest in a company, right? And like private equity, there's no upside here in what we do, apart from getting your money back plus interest. And so that's at the core of what we do. The essence of what we do is asking, what can disrupt a company, whether it's AI, regulation, competition, inflation, the next cycle, right? I mean, this is where we spend our time.
And to your point about being in the market for long enough and it having been tried and tested with your experience. Thank you so much,
That's
James.
Right. Thank
really
you very
great
much
to chat with you.
Me.
James Reynolds is Global Co-Head of Private Credit at Goldman Sachs Asset Management. We'll have more ahead on the Asia trade, especially from this very event. This is Bloomberg.
We're counting down to elections here in Japan. The country is set to get its second prime minister in just over a year when the ruling Liberal Democratic Party holds its leadership election on Saturday. A leading candidate, Agriculture Minister Shinjiro Koizumi, is emphasizing wage growth to ease inflation, but has proposed only modest economic reforms. His main rival, Sanae Takaichi, is a staunch conservative and advocate for stimulus. But she's been taking a more cautious tone, signaling openness to ideas from across the political spectrum. Let's bring in David Boling, Director of Japan and Asian Trade at the Eurasia Group. David, great to have you with us. How different could Japan be depending on who wins this leadership election tomorrow?
Thank you for having me. Well, I think it's clear that Koizumi is the leader here among the five, and he's emphasized the importance of dealing with inflation. And I think that's the big lesson that we learned from the upper house elections and why the LDP lost the upper house is that the Japanese public is very irritated with inflation. So I think that all of the candidates, whether it's Koizumi or Takaichi or Hayashi, and those are really the three who are in contention at this point, are going to spend a lot of time focusing on inflation. The LDP's playbook so far, though, has been that it is relied on cash handouts to households who are suffering from inflation. And I think the Japanese public is tired of that. What they would probably really like to see is a cut in the consumption tax. But the LDP is opposing that. The opposition parties support that. But the LDP is in somewhat of a difficult position because it doesn't want to cut the consumption tax, which is what the public wants. But at the same time, it does want to address inflation because it's a real incumbent killer, and they know that.
I mean, you mentioned Cabinet Secretary Hayashi, who would be a continuity candidate from Prime Minister Ishiba, who himself surprised in the election last year, which led to the Nikkei tanking the next day. Could we see a surprise, and would that mean a significant change in terms of policy or perhaps continuity as well?
I mean, let's remember this is an LDP presidential election, and so the candidates are largely in agreement, I think, when it comes to economic policy and the direction for the country. Takaichi is somewhat a different one because she's been a long-time supporter of Abenomics, which is loose fiscal policy and loose monetary policy. So she's certainly one to watch, and I think that if she did prevail on Saturday, that you could see, some reaction from the markets because of her winning and her different views. I don't really think that Abenomics is the right prescription for Japan right now. It has inflation. Abenomics was there to deal with deflation, and I think that Takaichi even recognizes that some. If you saw that some of the debate forums that they had, even she moderated somewhat on her positions about spending and sounded a bit more moderate. I think she has to appeal to the moderates in the LDP to win because the conservatives, the Abe faction that she relied on last year, has splintered and has smaller numbers.
Not just appeal to lawmakers, but also potentially for forming the coalition later on with working along with opposition. Who do you think has a better sense of engaging with those parties?
Well, I think all of the candidates in the debate forums have recognized that the LDP and Komeito have to expand their coalition, right? They do not have a majority in the lower house, which is the stronger of the two houses. They do not have a majority in the upper house. So they are going to have to move forward, and all of the candidates have spoken about the importance of moving forward to build the coalition. I think Takaichi's talked in terms of moving a bit more quickly than the other candidates, but I would see that any of the candidates who prevail will move pretty quickly to establish negotiations. I think there's negotiations going on right now. I think the party that is most likely to become a coalition member would be the Innovation Party, the Osaka-based party. They are aligned with the LDP, particularly on defense and national security issues. I think they're at a point now where they recognize they are not probably going to achieve national strength, that they'll remain a regional party, and this probably makes them more willing to join the coalition in order to have some influence, whereas the Democratic Party for the People, I think, is the other opposition parties is still on the rise and probably less interested in joining the coalition.
David, wondering also, when you look at the debt path, how do things look in terms of progress? You outlined some of the potential cash handouts that voters are perhaps frustrated with. Take that along with how a consumption tax cut doesn't seem likely. What are you seeing in terms of perhaps what the progress might look like?
I think it's tough. I mean, I'll be honest. I think it's a very tough environment. We all know that Japan's debt to GDP ratio is 250%. And this limits its ability to do a whole lot. It also is, having to spend more money on defense. It is on the path, to reaching 2% of GDP by 2027. I think the LDP intends to, keep pushing for that. I think the Japanese public supports increased spending on defense, but when you ask the Japanese public whether they want, their taxes raised to do that, they're less enthusiastic about that. So the LDP is in a difficult position when you think about the current fiscal constraints that it's dealing with. I mean, these have built up over the years largely because the LDP has been quite willing to spend more money through supplementary budgets, which seem to become almost, an annual thing, and the LDP is talking about that now for the October legislative session as well.
Yeah, and of course, complicating the picture, normalization by the Bank of Japan. David Boling, good to have you with us, Director of Japan and Asian Trade at the Eurasia Group. We have more ahead. This is Bloomberg.
The latest from the corporate front, LG Energy will start sending South Korean workers back to the U.S. for essential business trips less than a month after hundreds were detained in a visa crackdown. This follows confirmation from a U.S.-Korea working group on the validity of visas and travel permits. Almost 300 Koreans were detained last month at a Hyundai LG battery plant in Georgia, marking a low point in relations with the U.S. Watching shares of Boeing suppliers as well in Japan, including Toray and Osaka Titanium. Bloomberg's been told that Boeing's 777X jet is now slated to fly commercially for the first time in early 2027. This is instead of next year, and that's setting the stage for potentially billions of dollars in accounting charges. Sources say customers, including Lufthansa and Emirates, are not expected to fly the plane until 2027. And the jet is already 6 years late. This, of course, has major strategic and financial importance to Boeing. We'll also be watching Tesla suppliers at the open in Japan after the automaker slumped on Wall Street despite a record quarter of vehicle sales. For more, let's bring in our Asia tech correspondent, Annabelle Jolis in Hong Kong. Belle, give us the context about why these blowout numbers failed to impress investors, perhaps more focus on the trajectory and whether they can keep these numbers up.
Yeah, that's exactly it, Avril. I think if there's anything that kind of came out of the sentiment of these numbers is that there's a very strong sense that it's going to be extremely hard for Tesla to replicate moving forward. So just recapping, in the latest period or the 3 months that ended, we saw company delivering nearly 497,000 or just over 497,000 vehicles. Not only was that about 7% higher than what Wall Street was expecting, you can see there, but it was also well ahead of the roughly 440,000 vehicles that analysts have been predicting on average. But yes, that sense, can Tesla replicate this moving forward? You've seen them, for instance, undershooting expectations again over the past couple of periods alone. The sense is no, and that's because there's a tax credit that's just expired in the US. So essentially that tax credit offset the cost of new vehicles by up to $7,500. And the issue here is that was supposed to extend until 2032, but as Congress passed the One Big Beautiful Tax Bill, or One Big Beautiful Act, the timeline for that expiry was brought forward to September of this year. So there was that big rush for people out there to try and take advantage of this tax credit that was in place while it lasted. So, for instance, it's not just Tesla. There was GM, there was Ford, there was Hyundai, Rivian. All of these saw higher EV sales. And there's that view, yes, they won't be able to, again, continue to replicate that. Our Bloomberg intelligence team, for instance, says sales in the US were higher, but you compare to what you saw for China, pretty much flat, and Europe still weak.
And yet Tesla has really soared in September, right? More than 30% or so. Investors seem to be focused on other parts of Tesla's business.
Yeah, that's right. I mean, it's actually been such a stellar run for Tesla over the past few months, and it's really that story, as you say, around this sort of reappreciation or rethinking around the growth drivers of the business moving forward. That was the big focus, for instance, we had in the earnings call recently, and Elon Musk made it really clear that he sees robotics, robo-taxis as the way forward for the business. I mean, robo-taxis, as we discussed recently, is well behind Waymo, for instance. It's also years away, perhaps, for becoming profitable. But robots, I mean, this is something that Elon Musk has said could make up to 80% of Tesla's value in the years ahead. So there's a lot of optimism around this. When you take a look at analysts, I mean, you've still got a large number that are saying buy, 28 buys, 17 holds, 16 sells on the company. But in terms of the buys, again, it's that AI story. The caution really comes from maybe investors being a little bit too optimistic, really, given those growth drivers, again, are still quite a way from making up really any sort of value for the company as well.
Yeah, Annabelle Jewelers there with the latest on Tesla. And of course, we'll be watching Tesla supplier Panasonic in the Japanese session as well. In fact, we'll be watching some other tech stocks across the session, given that we had that big jump on the Philadelphia Semiconductor Index in the overnight session led by Intel and AMD. We had news from OpenAI share sale that bolstered optimism for artificial intelligence. We're talking about the world's most valuable startup now with a valuation of $500 billion. EBITDA has really outperformed other Japanese tech suppliers. AMD dropped on that $600 million hit to net revenue from new export restrictions, but the space could see a little bit of volatility in Japan in today's session, so do watch out for that. We'll also be watching oil-related stocks, especially given that we broke that $61 a barrel level in WTI in the overnight session. Right now, we're seeing it at around that $60 a barrel, a little bit more upside on oil prices. But of course, this after we continue to see expectations of more oversupply in the oil market with OPEC Plus restoring more idle supply. Metaplanet, Bitcoin treasury company to watch after the cryptocurrency hit $120,000. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after the big tech rally that we saw in the overnight session. We'll be following those tech stocks in the Japanese session. South Korea, China away on holidays, and of course that offset the concerns around the second day of U.S. government shutdown as well.
Yeah, and to your point about this tech rally, remember what our colleague said in the last hour about how this is a train that is running ahead. It's really difficult to argue to get off it. So interesting to see how that's going to be playing out in the session today, Shery.
Yeah, especially given that we're not getting economic data much needed in the United States. But today's session in Japan also about the leadership election of the ruling Liberal Democratic Party over the weekend. Take a look at how we're setting up because we have seen some analyst expectations being upgraded. JP Morgan raising the year-end target for the topics for the Nikkei. Goldman Sachs raised it last week. And we have seen this optimism over the Japanese equity markets, especially given that history shows us that usually you get stocks rising in Japan after leadership change. The Japanese yen holding at that 147 level. We had a little bit of a spike earlier in the week given the U.S. government shutdown. We've been following the JGB space given the 10-year JGB auction yesterday. Not a strong demand as expected because, of course, also we have the BOJ potential rate hike on the table with the Deputy Governor Uchida reaffirming the stance to hike rates if the economy performs. We had seen the jobless number for Japan coming out at 2.6% for the month of August just a few minutes ago. 120 job openings for every 100 job seekers. Take a look at these tech companies that we'll be following as well. Given the rally that we saw in the overnight session with the Philadelphia Semiconductor Index rising, we also saw a little bit of a slump on Tesla despite good sales numbers. And of course, we'll be watching Panasonic as well. Take a look at how the ASX 200 in Australia is also trading because we have seen the RBA really holding rates steady. already this week, we have seen a little bit more divergence when it comes to the Aussie and Kiwi. The Kiwi dollar holding gains against the Aussie, given that we had weaker than expected Australian household consumption numbers. And you can see Brent crude at the moment around $64 a barrel. But we'll be watching some of those oil names in the Asian session as well. Given that WTI broke through $61 a barrel, we continue to have oversupply concerns in the oil market. But let's bring in Homin Lee, senior macro strategist at Lombard Odier, who today joins me here in Japan instead of South Korea, where I usually see you. So let's start with Japan. Since you're here, and we're also headed towards the LDP leadership election, I mean, we have seen a little bit of that rally momentum sort of fading in the past week or so. How should we position now that we are going to get a new prime minister?
Well, first of all, the election result is still quite difficult to predict, but the expert consensus seems to be that the election contest will head to the second round, and maybe Koizumi has a slight edge over Takaichi. But from markets' perspective, obviously the fiscal policy signals will be pretty important, in addition to questions about the stability of the governing alliance after this leadership election. The fact that Ms. Takaichi actually has been moderating her position on the questions of BOJ policy and the JGB financing, actually it's a positive signal for the markets in our view. And maybe after the election contest is over, assuming that we stay within the usual kind of fiscal policy from the Japanese government, then the markets can start focusing on the fundamentals again. And the fundamentals are basically, based on the Tankan survey recently, they're still quite resilient despite the trade disruptions. So we think the overall market trajectory will remain positive as we go forward.
The Bank of Japan, of course, paying very close attention to business sentiment given the trade uncertainty that you mentioned. So we continue to get these signals from the Deputy Governor Uchida, for example, that they're on track as long as the economy performs. What are the implications of higher rates for the stock markets, but also for the Japanese yen? 147, 146, could we head towards 140?
So rate hikes are not necessarily ideal for the stock market, and certainly it's a bit of a headwind to cope with. But at the end of the day, the likely rate hikes we're going to get in the next 2 years or so, in our view, is basically 2 to 3 hikes. And given the inflation forecast that we have and the markets have, that still means that interest rates will be negative for the foreseeable future. So that's a manageable prospect in our view. And and we do think the debate on Bank of Japan's timing for the next hike will continue to get the market's attention for sure. But our assumption is that we get 2 hikes next year, first in January and second in October. And the timing of the next hike, we still think, even though it's a very, very close call, it will likely be in January, given the fact that the third quarter growth will be probably flat for Japan. And you might not even get a meaningful data from the U.S. side for the next few weeks. So this type of uncertainty, in our view, probably motivates BOJ moving in January instead of October.
What does this mean for dollar yen and its relationship with the topics?
So our 12-month forecast for dollar yen is actually 140, and our assumption for the U.S. rate is for Fed fund rate to come down to 3% by the end of 2026. So if you assume 2 hikes by Bank of Japan and 5 more hikes by the U.S. Fed, that still points to a significant narrowing of the interest rate differential between U.S. and Japan. So we think that's supportive of stronger yen at some point. Now, for the stock market, obviously the expectation is that slightly stronger yen will be negative. But our expectation here is that once the LDP election is over, the markets will start focusing again on the fundamentals, and not just for the resilient macro data, but also corporate governance reform that continues to deliver pretty strong results in terms of the ROE and the buybacks and dividends. So our thinking here is that the correlation between topics and dollar yen will actually weaken a bit as we go forward, and this is certainly reflected in our positioning, which is unhedged exposures to Japanese equities from a foreign investors' perspective.
Homin, could I also also just get your thoughts on this U.S. shutdown. I mean, some of the analysts that are speaking to here at the Milken event note that this could actually stretch longer than the 2018 one, past 35 days. What is that going to mean for the Fed? I mean, you say that it might revert to a risk management approach, but is there inherent risk from a potential cut this month, given how we won't get the inflation data potentially?
So the lack of data is an issue, and that certainly suggests that the duration of the shutdown will still matter. Even the markets right now are kind of looking through this episode right now. Our assumption here is that if you don't have the resolution before the military personnel pay date in the middle of this month, the political dialogue could actually deteriorate in Washington, D.C. And as you said, maybe that points to even longer shutdown and the absence of crucial macroeconomic data from the U.S. Fed front. And that, for the market is going to be an issue. But the bottom line is, in that kind of situation, it's going to be a negative scenario for the dollar and a slightly more dovish scenario for the U.S. rates, because the monetary policy will be operating basically without evidence in the background, and the worry for the markets last week was the batch of very strong data from the U.S. economy. So if you actually have a prolonged shutdown, you might actually have an offsetting factor for that. And there's a whole question of the reduction in force attempt by the Trump administration that could be potentially even more effective if you have a lengthy shutdown.
Good luck trying to figure out the implications of the shutdown, right? But it was interesting that despite the ongoing uncertainty of the second day of shutdowns, we continue to see the rally with tech optimism, OpenAI, NASDAQ 100, second consecutive day of records. I mean, at what point will investors think this is too stretched? I mean, this is getting a little bit frothy.
Well, it's calling the peak in this rally. It's really difficult, and obviously it's a very humbling experience. We think the interesting playbook might be actually the last bubble in 1999 and 2000 that was ended by significant hawkish turn by the Fed. But the combination we have right now is that of stable commodity prices and Fed rate cuts and a range-bound dollar. So that has the impact of boosting investment sentiment. So our guess here is that the investors will simply will definitely try to push markets higher. We'll start to test the limits of this rally when there is a shift in the political and policy dialogue regarding the Fed policy. But the thing is, we are in the middle of a potential transition at the Fed. So this euphoric sentiment could actually last quite a bit, and that's certainly the risk that we're dealing with here.
Homin Lee, really good to have you with us, senior macro strategist at Lombard Odier. Joining us today in the Tokyo studio, we have, of course, the LDP election, but also South Korea away on holidays today. So what a perfect time to have him here. Take a look also how crypto-related stocks are trading in the Japanese session, because we talked about that huge tech rally that we saw. The Philadelphia Semiconductor Index jumped in the overnight session. You can see all of those crypto-related stocks also gaining ground. Bitcoin and the Philadelphia Semiconductor Index, that correlation has been rising recently, which has been interesting, and we have seen Bitcoin gaining ground for more than 6 sessions and topping that $120,000 level, also for the first time since setting a record high 7 weeks ago. Of course, benefiting from the U.S. government shutdown, the uncertainty there as well. Take a look at some of those oil-related stocks, because we had WTI breaking below the $61 a barrel level in the overnight session, and we continue to see these oversupply concerns. We are talking about OPEC Plus restoring more idle supply. That could come in November. So we saw WTI now at the lowest level in about 4 months. We do have more ahead on the Asia trade. This is Bloomberg. Japan's ruling party votes for a new leader tomorrow, with the winner set to become the country's second prime minister in just over a year. Investors will be watching for any signals on fiscal and monetary policy. Our economics and government reporter Yoshiaki Nohara joins us now with the latest. What's at stake in this leadership vote, Yoshi?
So as you mentioned, this race is going to choose who is going to be the prime minister for Japan. But I would say also what's at stake is the survival of this ruling party, which has been in power for decades.
So what does that mean then in terms of where the LDP goes from here? As you mentioned, it's really a test of sentiment on this party that has been in place for decades, but at the same time, voters want more reforms, young voters want change, and we have seen the rise of populist and right-wing parties as well.
Right. So the bottom line is that the LDP is running a minority government in parliament. So meaning that not only they just need to put in a new face to get going, but at the same time they need to be able to find a person to be able to work across the aisle with opposition parties.
What is the current situation with the race, and how might all this ultimately impact the economy?
So three leading candidates, according to polls, the current agriculture minister Shinjiro Koizumi, and also former economic security minister Sanae Takaichi, and chief cabinet secretary person Yoshimasa Hayashi, all of them are leading in polls. And what would that mean is that probably what would be the most kind of unnerving choice for the markets is the Sanae Takaichi. If she's chosen as prime minister, she's known for aggressive fiscal and monetary policies.
She has toned down a little bit of that rhetoric, though, right? And we are seeing more indications coming from the BOJ where they're determined to head if the economy performs.
Well, you're right. She toned down a little bit. But remember, yesterday there was a report by Kyodo News that she was the only candidate suggesting that BOJ should hold the rate around 0.5%, which was in contrast to other candidates. All of them are saying that it's up to just BOJ. Right, and she hasn't totally given up, her policy direction. But you're right, she has toned down a little bit. We'll see what happens.
Yoshi, thanks so much. Our economics and government reporter Yoshiaki Nohara for us there. Now, we're also tracking developments out of Beijing. It has given a stern warning to the new U.S. envoy in Hong Kong not to interfere in China's internal affairs. And this is after the Consul General reportedly invited prominent former opposition figures to her inaugural receptions. Our chief North Asia correspondent, Stephen Engel, joins us now for this. So, Steve, bring us up to speed. Give us the context of what's at stake here.
Yeah, that's right. So the commissioner of China's Ministry of Foreign Affairs office here in Hong Kong did summon the new Consul General, Julie Ide, to their offices and issued essentially a stern representation to Ms. Ide, who is the new U.S. Consul General who took her posting here in Hong Kong in August. Also explicitly laid out what the Chinese Ministry of Foreign Affairs says are 4 must-nots. So I would assume those are the red lines that they're giving the new U.S. envoy here in Hong Kong. This during a meeting with Ide this week. He warned her to refrain from, quote, meeting those she should not meet with, nor colluding with anti-China individuals, nor interfering in national security trials that are still being held here in Hong Kong. Now, among the invited guests, according to local media, state-affiliated local media here in Hong Kong, included former opposition figures, including Anson Chan, who was the chief secretary during the last years of the British colonialization of Hong Kong, as well as Emily Lau, who is a former journalist, but also the former chairwoman of the Hong Kong Democratic Party, who had not been charged during these protests and the like. Neither of them actually have been, but they were invited to these events according to local media. Emily Lau has spoken to us. She says it was a normal event that they attended to mark it's not an inauguration, but the taking up of the post for Julie Ade here in Hong Kong. She says, telling Bloomberg News, that it was a regular event, a regular diplomatic event, and that Beijing right now is overreacting. And now I'm going to quote her. She says, Hong Kong is an international city, and we should be free to interact with each other. If we have committed an offense, they can arrest us. Now, the U.S. Consulate General here in Hong Kong has not immediately responded to a request for comment.
And Steve, despite the tensions, we have heard a more optimistic tone coming from U.S. Secretary Scott Bessent when it comes to the trade negotiations, at least.
Yeah, that's an interesting thing, given that Donald Trump in the last couple of days has talked extensively, as well as U.S. farmers have expressed their displeasure, if you will, if not outright anger, at the state of affairs with soybeans and agricultural products, because the Chinese have simply not bought any U.S. cargoes of soybeans, and we're already a month into the harvest, and Trump and Xi are not going to meet for another 4 weeks. So that'll be 2 months into the harvest in the United States, with so far no indication that the Chinese are buying soybeans. And U.S. soybeans, anywhere between 30 to 60% of annual crops go to China. This year, zero, nada. China's buying from Argentina, from Brazil, and elsewhere. Trump says that's a negotiating tactic. But the problem here is they're not likely to be negotiating again until another 4 weeks, or maybe a little bit earlier, when Scott Bessent said he's going to be meeting with his counterpart across the table, He Lifeng, the vice premier, for a fifth round of trade talks sometime before the current 90-day truce expires on November 10th, possibly as well on the sidelines of APEC when Xi and Trump are going to meet. But again, that pushes the can down the road even further in this current harvest. But Bessent is optimistic that there's going to be a significantly large breakthrough in those trade talks with the Chinese. We still don't know what that breakthrough might be, though.
Chief North Asia correspondent Stephen Engel there with the latest on the China and the U.S. trade negotiations. We're watching, of course, the trade front very closely as well, with European futures trading like this after the EU plans to hike tariffs on their steel imports to 50%. That news learned by Bloomberg recently. We actually saw the euro taking a little bit of a dip in the overnight session, but European stocks have been on a tear. They're at record highs already. They've come into the fourth quarter on a positive note, despite a little bit of weakness in the previous quarter. DAX futures also up 0.2%. More ahead on the Asia trade. This is Bloomberg. We're watching Tesla suppliers in Japan session today. A little bit of a mixed picture with TDK down 0.5%. It gets about less than 1% of its revenue from supplying to Tesla. It's very diversified. Panasonic also about 2% of its revenue from Tesla. Of course, we learned overnight that Tesla had a surprise increase in quarterly vehicle sales. We had seen a pretty good September for Tesla stocks, soaring 30%. For more, let's bring in our Asia Tech correspondent, Annabelle Drewlers in Hong Kong. Annabelle, despite the good delivery numbers, when it came to the overnight session, Tesla actually fell. Why?
Yeah, that's right. I mean, yeah, to your point, it was a drop of around 5%. Actually, we saw Tesla initially climbing as much as 2.5% after it reported these sales figures, but it fell back. And I think the big concern here from traders and analysts and investors is that those sales numbers are going to be really hard to match moving forward. So just to recap them, in the third quarter period, the company delivered just over 497,000 cars. The estimate had been for around 440,000, so you're well ahead of that. And it was, importantly, about 7% higher in that 3-month period than a year earlier as well. But there is a concern around the EV tax credits. So essentially, these have been offsetting the cost of purchasing a new EV by up to $7,500. After Congress passed the big, beautiful bill a couple of months back, the timeline for expiry of those tax credits was brought forward. It was supposed to end in 2032. It was brought forward to September 30. So it created this really major rush, essentially, where customers were going out to try and purchase the EVs to take advantage of those tax credits. Tesla's not the only one. GM, Ford, Hyundai, Rivian, all of those saw their EV sales picking up in this period as well. And the concern from many, including our Bloomberg intelligence team, is that they won't be able to replicate that moving forward, especially when you compare the sales in Europe, still weak, in China, pretty much flat for the period as well. Even though, as you say, you've seen that big surge in the company's stock valuation as well, and that's as investors look ahead, or some investors at least look ahead to other possible new growth drivers like robo-taxis, for instance, humanoid robots, the Optimism program. Elon Musk says that could make up to 80% of Tesla's value moving forward. But again, we're still quite a ways off that actually starting to generate any sort of meaningful contribution to the bottom line.
You talk about valuations. We've been tracking the reaction to our scoop on OpenAI's valuation. What are we seeing in Japan stock so far?
Yeah, this has been really interesting to note. So yesterday, it was a really great Bloomberg exclusive from our team. And just to have the highlight on that, it was a secondary sale deal where employees could sell their shares internally to investors. And the valuation for that, importantly, was at $500 billion. Now, at $500 billion, it puts OpenAI ahead of SpaceX, for instance, but it makes it the world's most valuable startup. So this is our scoop on this. But the market reaction you saw, for instance, in the NASDAQ, hitting a second straight high. You saw names like Nvidia, AMD, Broadcom, all of those gaining. So that chip story is very much intact. And you take a look at some of the big movers in Tokyo so far. You've got SUMCO, for instance. That's one of the world's largest silicon wafer manufacturers. You've got Tokyo Electron, a chip equipment manufacturer name. Nitto Denko, for instance. They make chemicals that are used for semiconductor manufacturing. And Rome as well, another semiconductor-linked name. So it's that story around AI optimism. Again, it continues to extend. You saw that on Wall Street. It'll be interesting to note as we head through the session in Tokyo this morning as well.
And we'll be watching the Open. Belle, thank you so much. Annabelle Jolas for us there. We'll have more ahead on the Asia trade. This is Bloomberg.
South Korea and China away on holidays, and a little bit of a mixed picture when it comes to trading in Japan and Australia. Not surprising, we're seeing energy-related stocks leading the declines on the ASX 200. Remember, WTI broke below $61 a barrel, given, of course, the concerns of oversupply and the return of more supply coming from OPEC+. But tech stocks continuing to gain, leading those gains on the Nikkei, leading those gains on the topics as well, at a time when we have seen already JP Morgan raising the year-end target for the topics for the Nikkei. Goldman Sachs raised their target last week ahead of the leadership election of the ruling Liberal Democratic Party this weekend on Saturday. JP Morgan expecting more political stability, a shift away from wealth redistribution-focused policies toward a growth strategy, propelling Japanese stocks higher. Avril, we continue to watch, of course, the eco data out of Japan as well, with jobs numbers just earlier today. The unemployment rate rising in August.
Yeah, and of course, that absence of U.S. data in the form of payrolls, that is quite a stark distinction we're seeing there. Interesting to watch how that plays out in markets. But I'm here, of course, at the Milken Institute Asia Summit in Singapore. And our next guest oversees international operations for PIMCO. Private credit, of course, has been a key talking point at this event. He says the credit market is now taking on a larger, more structural role in asset allocation plans. finance. Joining me now is PIMCO President Christian Stracke. Christian, really great to have you with us.
Avril, great to be here. Thank you.
So you have a view of how things have been shifting in terms of the role that private credit is playing in asset allocation. What are these shifts you're seeing?
Exactly right. It's really exciting. The shift is really what's happening with banks. And it's less about banks exiting markets, but banks more looking for optimal allocation of their balance sheet. So rather than banks making every loan and keeping every loan sitting on their balance sheet, they're looking for partners who can take some of the loans that they're originating. So asset managers like PIMCO are coming in, working alongside banks. They are the ones who face the ultimate consumer, the ultimate household. But then PIMCO, in their private credit strategies, we can come in and we can take some of their loans into our strategies for our clients. So banks get a less balance sheet heavy option, and our clients get to access some of these high quality private credit claims. And that way, it creates a much more resilient credit market where it's not completely dependent on the banks. You have more diversified sources of financing, a combination of bank asset managers operating in the credit markets.
And how do you maximize value in an environment where it sounds like public and private are converging even more?
Yeah, you really have to focus on underwriting, credit. And we're seeing that in the last few weeks with a few big credit stories in the headlines of some defaults that are happening in the headlines right now. You know, a lot of people focus on origination and deploying capital and getting the deal, and that's exciting, and that's, of course, important. I mean, you do have to source the deals, but it's underwriting and making sure, are you crossing every T, dotting every I, and making sure that you understand the risks that you're taking. So focusing on underwriting, focusing on analytics in your underwriting is absolutely critical. So ultimately, we will have a recession at some point. It's been a while since we've had a real recession, but at some point there will be a recession. When that happens, there will be a lot uncovered in terms of bad underwriting. So something we're very focused on here is, yes, being able to deploy capital in a broad, diverse opportunity set, but focusing on the credit underwriting.
How closely are you watching developments around the U.S. shutdown, the tariff backdrop? How is that affecting credit markets?
Very, very closely. And our base case, our pretty strong base case, is that this gets resolved in some amount of weeks, days or weeks, in a way that won't be too disruptive to the economy. It is disruptive to the markets at this moment of time. Of course, we're flying a little blind without data that we normally have, that kind of thing, but it's manageable for now. In the low probability event that this lasts for several weeks, that could be pretty disruptive to the economy, could be pretty disruptive to a number of federal workers and all of the economy that depends on that ecosystem. That could have a real impact, if that happens over time, on the credit market. So we're focused on it very closely. We expect that this should be resolved in less time than that, but it certainly is a downside risk that we're looking at.
Against this backdrop, we also have, to your point about this market convergence, I think products are also getting a bit more sophisticated. Does that make it trickier to navigate?
Well, it actually makes it better for clients. If you have these more sophisticated products that are more aligned with client needs and also more aligned with client liquidity expectations. So that's, in this convergence of public and private, you have to be aware of some clients need liquidity, some clients need less liquidity, and to have a more diverse set of products and strategies to be able to offer clients actually helps us match product to client better than would otherwise be the case, and also match funding to borrower better. So it works in both ways. It makes us more effective operators as we lend out into the market, and it makes clients happier, or at least set up to have better strategies more aligned with what they need.
One of the things that PIMCO is very actively involved in is asset-based finance. Are you seeing that in Asia much, or is this more of a Europe story?
We are. In fact, I was just meeting with our asset-based finance team here in Singapore. It was a great catch-up, and there is so much going on all across the region. And, historically, asset-based finance, which really is all of the private credit world outside of corporate lending. So it's residential mortgages, it's consumer credit card receivables, it's equipment financing, aviation finance. Historically, a lot of that has been in Australia, a little bit in Hong Kong, sort of the developed APAC. What we're seeing is it's branching out. We're seeing more and more in Singapore itself. We've seen a number of interesting deals. In India, there are new deals coming. In Japan even, which traditionally has been so heavily banked and where there really wasn't a role for non-bank lenders like a PIMCO. Even in Japan, we're starting to see opportunities pop up. So it is, this asset-based finance wave is spreading into APAC, and it's very exciting to see these opportunities.
What about for data centers?
Yeah, so data centers is a really interesting area for our platform. For PIMCO, data centers are we're lending against the development of data centers, and so there have been some very big deals in the US recently where PIMCO has been involved, and that's been quite exciting. In Europe, which we see as the next frontier of data center development, especially in some of the southern European nations where there just hasn't been a lot of development yet, there we're actively deploying capital in developing data centers. And in Asia, there's also a lot of need for data center development, particularly outside of the core markets like the mega cities in the more developed economies in Asia. So think about Indonesia, think about Thailand, think about a number of these areas. They need data centers. Everyone needs data centers local to where they work and where they live, and there will be significant needs for development in digital infrastructure in Asia over the next several years, and PIMCO is actively looking at those opportunities.
Is there some element of competition as well, given how there's so much optimism in this space? Like, what are your key advantages when you push this to investors?
There's a lot of competition. There's a lot of capital raised. There's a lot of people looking for deals. And I think what you have to do is be a little intellectually honest that not every data center is going to work. Not every data center is going to work for every hyperscaler. And you have to be very focused on what exactly is the market, the sub-market, the micro-market that the large tenants need, what exactly is the product that they need, and making sure that you're providing that product to them. Because otherwise, you could end up with data centers which ultimately no one really wants in markets that may be oversaturated or in a location that might be a little too far from power or some other items. So really focusing on the micro details of exactly what works in data center infrastructure is what we're all about.
When you look at the APAC environment, you seem quite optimistic. Does it extend to perhaps working on an APAC-specific fund as well?
Well, we don't have anything specific right now to talk about, but certainly that's something that clients ask about, is whether that could make sense, whether there could be an APAC-specific fund in asset-based finance, in diversified private credit, something like that. We would expect that over time that will become more and more common, as what we're seeing is a global trend of looking for regional alternatives in private credit, where people want to allocate by regional and have regional diversification rather than be so concentrated in the U.S., which speaks for the vast majority of private credit right now. People are really looking, just like in public fixed income, in public equities, people are looking for alternatives to the U.S., alternatives to the dollar. And so in time, we'll probably see the emergence of more dedicated private credit funds in Asia. There already are some, and there will be more to come.
Would you be able to put some numbers to the outlook for fundraising, maybe 3 to 5 years down the line from here?
Well, for right now, it's interesting. Fundraising in private credit is a little slow. And now, in direct lending private credit, so that corporate space in private, and that's because private equity is itself so slow. The deal making is not really happening, and so fundraising is difficult. The deals are not there, deploying capital. So that's all in the corporate direct lending space. Meanwhile, in asset-based finance, which is this diversified set of mortgages, consumer claims, equipment financing, et cetera, there the fundraising is actually very robust, and we're seeing a very significant growth. At PIMCO, we've talked about growing our alternatives revenues from 23% of our revenues to 30% over the next several years. And we're seeing that happen this year, continued growth in fundraising around our alternatives business.
What do you think can be improved on the deal-making front? Do you think there's a lot of optimism there, or are there still some gaps?
Well, yes, there's a lot of optimism, and frankly, there's some sloppiness. And we've seen that in some of the headline defaults over the last few weeks, where there's real questions about, did the underwriters look at the collateral, test the collateral, bring in third-party auditors to really understand the quality of the collateral that was there, or whether the collateral actually exists? So some of the big defaults like First Brands or True Color that have come out in the last few weeks, that's the question. And so it suggests that people are more focused on deploying capital rather than making good credit investments where ultimately you have the return of capital. So that's really a focus for the entire industry right now. Has there been sloppy underwriting? What has been missed? What can be caught on a go-forward basis? Something all of our teams at PIMCO have been historically looking at, in real detail, but something where you have to remain vigilant because, there are these ways that you can slip up. And ultimately, the ones who will win, the ones who will deliver the best performance, will have done the best underwriting on the way in to get that return of capital on the way out.
A more rigorous process as well, and a key test for the markets overall. Christian, it's been really good to chat with you. Thank you so much for your insights into this market. Christian Stracke is president at PIMCO, and we have more lined up at this event, the Milken Institute Asia Summit. The CIO of Malaysia's Sovereign Wealth Fund joins Haslinda Amin live on Insight at 11 a.m. if you're watching in Singapore or Hong Kong. We have more ahead on the Asia trade. This is Bloomberg.
Broad upside across equities in Japan, and this as we continue to get really that optimism over the tech rally overnight. JP Morgan just upgraded Japanese equities to the Nikkei year-end target to 47,000 from 42,000. But really, the optimism is out there ahead of the LDP election over the weekend, right? And we will be focusing on specific sectors, especially when it comes to policy-sensitive ones. I mean, the rally today was on tech. We'll be watching green tech because that's more policy-sensitive. Infrastructure and materials-related stocks as well, not to mention, of course, defense stocks, given that spending could differ a little bit, the views, depending on the reformist and hardline conservative candidate. Overall, in the past 4 out of the 7 most recent LDP elections, we have seen the topics actually gain ground in the following 12 months. But could we see a surprise, especially given last year we saw Ishiba's surprise election to become the next prime minister tanked the Nikkei about 5% in the following day. So hedge funds now employing a range of tactics to make money from Japan's too close to call leadership vote. Let's bring in our senior FX and rates reporter, Ruth Carson. Ruth, what are some of the strategies they're using?
Absolutely. It is less than 24 hours to the pivotal vote, and investors, especially hedge funds, are closely watching this from Singapore through to London and New York. Now, we are seeing a range of strategies deployed, and it kind of shows the tension that's coming out of this vote as well. Some who have been actively shorting the yen, for instance, have closed their positions. They're waiting now. Others are going a step further. Some are buying gold or protection just in case, vol suddenly spikes too much, and others are just shoring up cash. Very simple strategy, but incredibly effective, because there are expectations that if certain shares rally on the result, when the winner becomes clear, it could be an opportunity to sell.
Ruth, it's a knife-edge election, looking too close to call. What are some of these funds doing to hedge their positions if they get the outcome wrong?
Yeah, a great question. And again, it is a knife's edge election. It's not entirely clear as to who is going to pip the other to be the new LDP leader. And there's obviously multiple layers to the voting as well as to whether Koizumi or Takaichi could win. So in this case, there are some funds who are going, look, let's buy gold. It's proven to continue rising in price, historic highs every other day, and it's now proving to be a hedge not just for rates risk, but political risk. Others are doing bets that are beyond, that go beyond the election noise. So they're shutting it out. They're focusing on all the macro, geopolitical, and rates factors that are going to influence the Bank of Japan's monetary policy path. And they go, you know what? If it's too close to call, let me focus on that instead because it's a longer term trend and I can make my bets there.
All of those factors really being played out on the Japanese yen as well. And this week we had some interesting moves because of those safe haven flows given the U.S. government shutdown as well.
Absolutely. And again, that debate on the yen being a haven, or is it really not, is still up in the air. And it is still something that's talked about in markets with traders, with hedge funds, and with asset managers. Just to give you a glimpse as to how the tension is being played out, the spread or the difference between asset managers that are buying the yen and hedge funds that are shorting the yen has actually widened to the biggest gap since 2007. So we're talking global financial crisis era type spreads. It just shows you how people are thinking differently on the yen. And yeah, it remains to be seen as to how this will play out, haven or no.
Ruth, thank you so much for walking us through what we can be expecting on the FX markets on this knife-edge election. Bloomberg senior FX and rates reporter Ruth Carson for us. More ahead on the Asia trade. This is Bloomberg. Indonesia's Vice Minister of Trade says Jakarta is seeking to improve relations with both the U.S. and China. Dia Roro Esti Widya Putri also told us more about trade negotiations with Washington as the country seeks exemptions for key exports such as palm oil, coffee, and rubber.
Yeah, so I mean, it's always good to be optimistic, right? It's hard. I mean, everything that is happening is hard in itself, not only for Indonesia, for countries across the world. And so I think the outlook that we're trying to do and to have is to have that optimistic outlook, to see that, look, America, the U.S. has been a great trading partner for Indonesia. They are the second export country and also, if I'm not mistaken, the fourth import country for Indonesia. Their positioning for us is very important, and we want to continuously maintain those good relations.
Southeast Asian economies, especially emerging economies in Southeast Asia, are currently really concerned about China dumping cheap goods into the respective markets. Where is Indonesia on that?
Okay, so with the case of China, again, China is our largest trading partner. It's our first exporting country. It's our first importing country, right? So we're always engaging with China. We see this as being a great trading partner. In terms of the goods coming into Indonesia, as you say, we have a mechanism also in place. So in the Ministry of Trade, we have the anti-dumping committee, and China is open for discussion with respect to this. And again, this also entails the types of conversations and the cooperation that we want to continuously build with China. I was at the AEM, the ASEAN Economic Ministers meeting just a few days ago. Very hectic, but very productive. We also, on the sidelines, spoke to China, and we wanted to see how we can better kind of improve our bilateral relations and trade going forward. And again, about these concerns were also addressed.
So the numbers are not showing just yet, as in the impact on industries like textiles. Has there been, any implications on I guess, small and medium enterprises in the country?
So one of the things that we'd love to see is that industries in Indonesia continuously thriving, irrespective of everything that is happening. We have anti-dumping measures that are currently in place in Indonesia. So that is there, right, by the governments, and the government is there to kind of support the local businesses. But also industries have their own role, share of roles to contribute to the Indonesian economy.
Indonesia's Vice Minister of Trade speaking to us for Insight with Hasinda Amin. Join Hasinda for that interview in full at 11 a.m. Singapore time today, 11 p.m. in New York. And take a look at some of these crypto assets that we're following, crypto-related stocks as well. I mean, we're seeing a little bit of pressure in the Asian session, but only after Bitcoin surpassed that 120,000 level in the overnight session and gained ground for 6 sessions. We're talking about gains this high for the first time since setting that record high 7 weeks ago. It's a seasonally strong month. The month of October, Bitcoin has gained in 9 of the past 10 Octobers. And for the fourth quarter as well, is historically the strongest quarter of the year for cryptocurrencies. Take a look at how futures are setting up. Remember, South Korea is away on holidays. China is away on holidays. So what we'll be watching are the futures trading. FTSE A50 China futures closed down 0.4%. TAIEX futures unchanged. But of course, that tech rally in the overnight session was huge with that OpenAI share sale, the optimism over AI. And you can see U.S. futures continuing to gain ground, 0.1%, despite, of course, the ongoing uncertainty over the second day of the U.S. government shutdown. That's it from the Asia trade. The China show is next. This is Bloomberg.